Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Welcome to FinTips. It's usually a short video series that we do to just kind of cover the basics of different things. And if you noticed our video yesterday, it was on the two retail ETFs, right? And it was that one of them had a heavier position of Amazon than the other one, and we sort of pointed that out. Well, I intentionally left out why so that we could cover it today. That is the difference between equal weight and market cap weight. So the first thing we want to talk about, what on earth is the difference between equal weight and market cap? Well, in an ETF, you now know that an ETF is a basket of stocks, and how much money goes to each one of those stocks is the weighting. So, for example, our dividend fund on our website there consists of 30 different positions. And what happens is we equally weight those positions, meaning if you have 30 stocks, we have 3.33% going to one, 3.33% going to the other, and so on, right? So if you put in $1,000 into the dividend fund or any ETF that's equally weighted, your $1,000 would be spread evenly across the different symbols, say XYZ and ZYX, so that I don't get in trouble with the regulators. I won't put any real symbols in there. All right, so that's an equal weight. That's easy to understand, no problem at all. A market cap weighted fund or index or exchange traded fund is a little more difficult. Market cap means they take the market cap of the company, the value of the company, and they give sort of extra weighting to those that are larger. Simple example. The S&P 500 is a market cap weighted index. What they do is they say, okay, what's the price of the shares? Let's say the price of the shares currently are trading at $50. They say, okay, how many shares does that company have? Let's say they have 10 million shares. You times these two together and you get a market cap of $500 million. Yeah, 500 million, right? So that company has a value or a market cap of 500 million. They then take it a step further and they say, what about the other positions that we have in the S&P 500? What if they were trading at $10 and had 10 million shares? Their market cap would not be as large. Therefore, they're not as powerful. They don't have as much weighting. And if you put $1,000 into that fund, the majority of your money would go to this one, and the rest of your money would go to the one with the smaller market cap, in this case, the $100 million market cap. You get where I'm saying so far? So the bigger the company, the bigger the weighting. Now, here's what's interesting. If you happen to like looking at this stuff, if you look at the S&P 500, that's a market cap weighted index by default. Right now, the largest company in the S&P, right now, like as we're talking, the largest company is Microsoft. They have a 3.8% weighting. So if you put $1,000 in the S&P 500, 3.8% would go to Microsoft. 3.5% would go to Apple, 3.1% would go to Amazon, 1.7% would go to Facebook. That's the jump right there. There's three of those big giant guys at the top there. So this leads me to a very interesting sort of conversation here. You know how you're told to buy index funds, right? It's sort of a pet peeve with investors, financial professionals, because you're told to buy an index fund by all these big, great investors, but they never tell you which one, right? Should you buy the S&P 500, right? That's the most popular one. The S&P 500 market cap weighted ETF, one of them is SPY, right? Another one is VOO. That's a Vanguard one. Most people know that one because it's a Vanguard one. The SPY, by the way, is the oldest and most in the original ETF out there. But if you bought those, you are essentially participating in the exact same way as the S&P 500. But if you wanted an equal weight and you wanted to participate with the S&P 500, that would be symbol RSP. That's just one of the popular ones. I don't get anything for suggesting that to you. It's just one of the popular ones there. What that does is it says all of the stocks in the S&P 500, 505 names at the moment, divide them equally rather than doing the 3.8 in Microsoft and so on and so on. Now the question is, if you're told to invest in an index fund, which one is better? Right now, the traditional way of going about it, you're up about 12%, right? If you look at the VOO, you're up about 11.78%. This already kills me, because if you look at the RSP, if you invested equal weight, you'd be up 13%. So you'd be doing better on this one. You go, yeah, but Dustin, the fees. The fees, brother, I got to stay away from the fees. I can't do it. I was told to invest in index funds because of the low fees. Okay, let's take that into consideration. The VOO currently is the lowest cost exchange traded fund, S&P fund that I know of, and its cost is 0.04%. Sorry for making a mess here. 0.04%. So you're paying less, and you're happy, right? Because you read a book, you saw somebody tell you, go invest in an index fund with the lowest possible fee. So if you were to invest in anything else, right, you're pissed. You'd be like, I don't want to pay anymore. I was told to invest at the lowest possible cost. Well, you also missed out on better returns, didn't you, right? Now, I can't compare it to the SPY. That has a little bit higher of an expense ratio. It should. It's doing a little bit better, right? So 0.04%. What's the cost of RSP over here? So I'm going to go, let's say the S&P weighted one, VOO 0.04%. That's what you're paying. Next to nothing. I mean, these things are dirt cheap, right? They really don't cost you anything at all. Now, if you were to go look at the RSP and you say, well, I want to be equal weighted, right? I was told index funds. I did my research and I said, well, I want the one that performs a little better, or at least right now is performing better. The cost of that one is 0.20%. Some of you are going to look at that and say, that's ridiculous. I'm not paying any cent higher because you know that affects my future returns, right? That's a common argument people say. It affects my future returns, and therefore everything else is a waste of time. Did you know, by the way, that half of all the money going into the market right now goes into index funds? That's how much you've been sold on index funds, when in reality, you don't know which one you're picking. All you know is you want an index fund. Had a lady the other day call. She opened an account. She said, I want an index fund. And I said, okay, which one? And she goes, the index fund. And I was like, wait, but which one do you want? Like, we can focus on something. And she didn't know. I said, well, why are you choosing index fund? And she's like, that's all I hear is index funds. That's what I'm supposed to do. And I was like, okay, well, what if I put you in an index fund that just costs a ridiculous amount of money, right? Let's think about this. Let's dig deeper. That's what I'm here to help you with. So the RSP, you're looking at a 13% return right now. If you say that's a ridiculous fee and I don't want to pay it, and you go over here and you buy a cheaper index fund, you better damn well be pissed that your return is less, right? If you're just as frustrated by the fees, you better be frustrated by the performance. The point of the story is there are more than one type of ETF that you can invest in, right? There are more types of exchange index funds that you can invest in. Leading back to yesterday's video, the XRT and the RTH, sorry to zoom in and out on you. The XRT and the RTH are sector funds. So you can actually participate only in retail, only in gold and things like whatever you want to participate in. So the XRT, what they said is, we're going to be an equal weight fund. We're not going to put any weight to anything. We're going to have all the retail stocks in there. They're basically all going to have about the same size investments. The RTH, they said, we're going to be a market cap weighted fund, right? Just like we've been talking about. So for that reason, Amazon is a big holding in the RTH. Home Depot is the second biggest holding in there. Amazon takes up 20% of the RTH, by the way, right? And that's not because they're bad people. It's not because they're trying to just bet it all on Amazon or whatever. That's how they design the fund. And so it's very important to know. One last thing I'll point out, the Dow. The Dow, if you decide that for whatever reason you want to invest in the Dow, not the S&P, the NASDAQ, the Russell, the S&P 400, 600, whatever, but you said, I want to just be right in the Dow. It's 30 stocks. It's easy to track. The Dow is price weighted. Whoa, what's that? A price weighted fund. This is the oldest style method that's out there. Price weighted fund means they simply take the current price of the stock and divide it by the divisor, in which case it's usually just the 30 stocks, right? So a stock like Boeing, to give you a quick example, Boeing, $300 and some right now, has a very, very high cost relative to the other names in there. It has a heavier weighting on the Dow. The reason they did that is the Dow was actually created in like 1897, 96, somewhere in there. And the reason they do it that way is because people weren't thinking like this back then, right? Investing in indexes or having an index was totally brand new. So the simplest way to pitch that to people was to say price weighted, right? Makes sense. That's the way they went about it. Anyways, now you know the difference between market cap weighted and equal weighted, and it's up to you to decide. Do you want to invest in an equal way, or do you want the larger companies to have more say in the performance of your portfolio? Know that you have the option, right? It's something you need to consider. And the most important thing I can take away for you to take away from this is to say, when someone tells you you should buy index funds, they're low cost, they're the best place for you to put your money, I'm not disagreeing with that. I'm saying ask them which one. Which one for me? I'm a 22-year-old guy. I'm a 40-year-old guy. I'm a 65-year-old retiree. If I'm in an index fund, which one should I be in? I hope that helps you out in some way. If it did, maybe you'll hit the subscribe button. If you like me, maybe you'll hit the thumbs up button. If you hate me, somebody will. You'll leave a comment below and we'll help you out there. But I appreciate you guys watching, and I hope that helps you in some way. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.